What about the banks? Their exposure is limited. We're talking about single-digit percentage points almost across the board.
Well,
just not Cullen Frost.
They have been very cautious about energy because the bias is on the downside. If you remember, in 2015 and 16, I was still at Kroll Bond Ratings, and we were waiting for the apocalypse. We had half a dozen significant energy lenders in the ratings portfolio, and it didn't happen. Why? Because the private equity guys rode to the rescue. So the question is, are we going to see private equity double down again, recap those credit lines you were talking about before, and enable these companies to continue? Or are they going to go into default? Because, you know, either scenario is reasonable. You don't know.
What do you think is more likely?
There's still a lot of demand for energy in the private equity world. I would think they're going to look really hard, especially given some of these valuations. You can dictate terms now. But I don't think the banks have huge exposure. There is, of course, somebody out there who's made too many energy loans. But I think they are so chastened by past experience, and especially the near miss in 15 and 16, that they would probably be rather cautious about it.
What's important, though, is you maybe differ with some of the opinions that have been shared. You don't think that it gets as bad as some fear because of private equity out there with buckets
That's right.
of
They
cash?
compete with the banks in terms of providing credit. If you think of it as assets and forget about loans versus equities, it's just a competition for assets. And so today, yes, there are mid-sized lenders who specialize in energy lending, but they try and stay away from the production side, and they try and focus more on services. So, you know, for example, I own Williams. I'm not going to sell it. You know, it's a pipeline company. I think that there's a lot of hype, and all I'll say is just as this. There are hundreds of companies, hundreds of governments that were downgraded last week. The rating agencies haven't caught up with this yet, so that uncertainty is going to remain in the market. And if you have the clarity to say, no, there's value here, to your point, right? I think, you know, you can do a lot of very good buying now. I'm a happy bear. A bear is happy when he stands in the stream and he's got a salmon in each paw. And this is kind of like 2018 with financials. I like it.
What about the idea that the ratings agencies who were deemed to be asleep at the wheel in the crisis are going to be more apt to do downgrades faster if there's this sort of stress?
It's physically impossible for them to react quickly when you have this many obligors who have had their fundamentals change in 2 weeks. I mean, you know, Steve's been talking about this. What do you do with all these sectors?
There are 4,000 corporates.
And they've all been downgraded.
27 downgrades by S&P so far.
Right. So